The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman. Yeah, this is the Tiger Technicians Hour, and here we are on this particular day, Wednesday. And why we say this particular day, because it's really interesting, is in the Chapman Wave methodology. I wonder if I can do this right now. Yes, let me show you this. This is for people who are a little bit new to my techniques. I like to consider that when we identify the lowest low bar that starts a turn to the upside, that it can go from a buy signal and be upgraded to a buy mode quite quickly. The implication is if I say buy mode, it means that it should go to at least 4 higher peaks. I alphabetize them from the low bar. As long as after the first peak, that low bar holds throughout the entire sequence, doesn't get taken out even by 1 penny, because that restarts the whole thing. What we're looking at is a peak A, peak B, C, D. It can go E, F, and G, but it's at D that other things can happen. That's just the most important thing. So what are we looking at here? We made a peak D in the Dow at 34,342, and that was back around the 13th of January. Pulled back sharply. Then we went back up again. We have been long the diamonds for quite some time. We used the 3 times also, the 3 times long, as kind of a trading facility. Try to keep a core, but also have sort of trade, we call it trading positions. Sometimes they hold for a while, so it's a short-term trading or even a more intermediate-term trading position. So at the low yesterday, we've been waiting for 3 days to get that low. We managed to get the low. That's not the issue. The issue is, I got a rule of 136, meaning it's not the second inversion of a chord when you're doing music. This is 136 in time. In other words, I love when you have, like here, going from that peak C to leg D, you have 1 bar rest and then you move higher. When it gets, and even this one here, when we went from that peak A, you had 2 bars rest, very negligible peak, but it was a peak. And then it went to a B and 2 days rest again, and then up to a C. Now it's taken 1, 2, 3, 4, 5. This is the 5th day. That means that if you have to actually wait for a new trigger to get a powerful leg D. Otherwise, it's just going to make either a peak C1 and a C2 by just missing it, or something else happens which says you go to the D, but then you immediately turn down, and now you go back into the consolidation. So yes, it's really great that it's been holding steadily. Look at this move that's gone from the 28,000s to the 34,000s, pulls back to the 32,000s, and now we're at 34,068. And we're breaking this little trend line here. I usually talk about these flag patterns as being not one of my favorite patterns. There's so much more information you can get than just looking at this triangle, sideways triangle. Why? Because after that spike to the downside, if you can make if whatever you're following makes higher highs and higher lows, there's a really good chance it's going to go to just under, or just above the previous high. In this case, the 34,342 high of mid-January. And then you got to be careful. Now, one of the reasons when I say careful, when I'm talking about either large rectangles or narrow rectangles, look what happened here earlier this morning. The E-mini was trading, and it looked great. And then it went to this cup formation with the peak D at about 41.64. And then all of a sudden turned down because it failed below the previous high in this cup formation. That's not a good sign. And then what happens is it goes more than 1-to-1 to the downside and keeps making lower troughs. It makes a nice Chapman Wave inside track propellant bounce off these 3 measured moves to the right in an arch formation, but it just can't get out of the rectangle. Well, what's my rule of thumb? My rule of thumb is that a rectangle formation can last a lot longer than your patience. Well, let me tell you. If you're talking about a 1-minute chart, this is the E-mini, from 7:53 this morning, and it keeps bouncing around, and then finally it goes to a higher high with a little doji candle, always a clue to say, just watch this carefully, at 9, what was that, 9:12. Now, you tell me, is that not quite something over an hour, something like that, in a sideways narrow trading range? Now, the rule of thumb is if it goes above the rectangle high in this narrow rectangle, long, narrow rectangle, be careful, because after that move, if it comes down and takes out the midpoint of this, I've got it in blue, the midpoint, there's a real good chance not only will it hit the bottom of the rectangle, but it'll go under it. Then if it happens really quickly, what happens is it tries to have a quick bounce to say, whoa, I forgot to say goodbye to my friends. But if it goes back over the rectangle formation's midpoint, that's usually a good sign. And that says, yeah, it's a good sign, but the damage is not done, because what happens is it goes quick enough to just say, oh, I forgot to say goodbye. Goodbye, everyone. And then it goes even deeper. Lo and behold, 41.50, it goes to that just about 9.30, and then you have that big spiral to the upside. That spiral took out the midpoint, it ran above, it took out the high of the rectangle, and it soared above, more than a one-to-one to the upside. I would even call this a one-to-one extension. And it went to those two doji candles right there at 41.60, about 41.66, I think it was, 66. Yep, 66.50. And then it comes down in the arch formation. Now what does it do? Yeah, let me just continue this rectangle formation right here. Click. The little dots, grab it. Here we go. All the way across. And it says, we are not done with the rectangle magnet. Look at this. We went under it. We just held beautifully the rectangle lower base of support that was going in from 7 o'clock. Pop up again, fail at that second peak B, make yet another arch, and now we're trying to find a base that says this is the base that a little later on in the morning will turn out to be really important if there's a break above the 41.65 to 41, let's call it 41.67 resistance area. If that happens, all of a sudden you can activate the 10-minute chart. Now look at this 10-minute chart. Remember, I always said, these are patterns that I look at all the time, 1 minute, 2 minute, 5 minute, and 10 minute. But look at this. Got all these Fibonacci numbers here. I might have to take them out if they prove useless because we go above it. But in the meantime, this is really important. So we were in a narrow rectangle, as I showed you, but this narrow rectangle basically went from 4 o'clock this morning. Now let's go on and show you something very interesting. Look at this. Spike to the upside. This is the one that I call the potential Eiffel Tower or A failure pattern, where it just pops up once in leg A. Sometimes it's a B because it just has a nominal peak A and then continues higher, but it comes back down. If this does not take out this left side low, but in fact starts to form a base here, that says you've now created all the downside pressure. This is a 10-minute chart. Don't get too excited. This is not a monthly or a weekly. It's just a 10-minute chart, but it tells you, you know exactly where your base of support is between 41.53 and 41.50. A close below 41.48 says, you're in trouble now, short term. But if over the next, in my show, by the 11 o'clock hour, when we get to the end of the show, if this is traveling towards the 41.65, 41.68 level, that's going to be the sign that you want to say, hey, some upside bias is coming in. At this particular point, all we can say is there's a big magnet at this horizontal line at 41.56. You need to move higher right now. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, just do something right now. Yes, I got out. Okay. Ready. So what we're looking at here is, look, there's a beautiful cup formation. You had left side, right side price, time match, symmetry, and it's not yet gotten to the high that was made. And the reason why I'm showing this, these are the techniques that I like to use for subscribers, for whatever we're looking at. Reason why we went added to our long position yesterday. And that's it. These are all the techniques that we're looking at. 4165.50. We haven't got there yet. We should try to get there. We actually went to 4165.75. So we just missed it. Okay, but we should get there. Now, what's really important about this particular pattern that we're looking at here is it rhymes, because you've got cup formation, arch formation, and now you've got the rectangle formation with the cup. And this is the challenge. I always like to say to myself, what would go wrong? What would be the negative thing in this particular pattern of the Dow? That is, if this arch formation, if we did not get that rally yesterday, and we used up yet another day on the downside below the 14-period moving average, I would have said, hey, that's terrible. But in the meantime, back at the ranch, so far this is good action. I think we're gonna. There are enough buyers out there that they really want to move this higher. Unfortunately, I can just get out of that long position during the break, because I don't like to be messing around and having my mind on two different things. So here we are. This has gone to a leg E in the 1 minute chart, and now it's got to the leg B. Because it's got to the leg B, there is a chance that from the 54 level in the E-mini, this could have been a 2-click session, at least in the morning, not the whole day, but at least for a good chunk of the day, because once we've started leg B, there should be higher highs to come. The target will be this left side high of 420 this morning, in the E-mini of 41.70. The reason why I'm taking a little time on this is because these are patterns that are so important in the intraday action that we're looking at, that gets replicated, because after all, isn't this a replication in a fractal of what happens in your bigger chart? But you can really tell this is a 1 minute chart or a daily chart or a monthly chart. The charts are charts. Okay, so let's get back to our story. And I wanted to go through some of the other things to say, look, let me do this real quickly. In the S&P, because the Dow got smacked about 2 weeks ago with Goldman Sachs and Travelers and a couple of others, and it plunged to the downside, it's had to make up a lot But look at the S&P. It's above all the resistance that was at 41, that was 100, 4100, that double top in December the 1st and December the 13th, pulls back all the way to the 3750s. But look at the way it's walked the 9-period moving average. I love this. This is a really good sign. This is saying that within the context of the patterns that we keep looking for, and that is to go to a D where other things can happen in the Chapman wave methodology, we've gone to a leg D in the weekly chart above all that resistance, Chapman wave inside track repellent zone. I like what I'm seeing. Now, I'm not one of those people that says, oh my God, this is it. And now we're going from 4152.64 in the S&P to tackle 4,500. And if we touch 4510, we're going to 4818.63 to make a new leg C in the. No, I don't do that. In my mind, I might be thinking that. That's got nothing to do with the practicality of the matter. The practicality of the matter is, yes, I believe that we've started the right side tidal change in the monthly chart, but it's a process. And to get that process to really ingratiate yourself to the upside, you're not going to get anything until this weekly chart proves itself that, say, the 4,000 to 3970 level is major support. And the weekly chart is now, this is a D, but because it's taken a lot of time to go from peak C, it's taken 1, 2, 3, 4, 5, 6, 7, 8 bars to go to leg D. That means it's almost like a brand new buy signal that you're getting, and that either it fails really quickly and plunges 100 points within another 2 weeks, or it just steadily starts to build up more confidence and build to the upside. So yes, I love what I'm looking at right now on the very short term. I think that there's so much negativity that I would not be surprised if there are these sudden squeaks to the upside. I don't know about a concerted effort that says, oh man, now we're going to just have these, that it's a new bull market and that this is in a bull phase in the daily. And the weekly chart has gone from a buy signal to a buy mode, and that's a really big positive. But that monthly chart is still not even in a buy signal. So this is a lot of work. It's a process, and I don't like to interrupt that process by having a mindset that says, spectacular, now we go to, no, one step at a time. You can think what you want. The practicality is that, look, you've got a bifurcated market. You had the Dow leading for months, and then you had the Dow failing for a couple of weeks, and then the others took over. Now you've got the QQQs in the weekly chart finally nicely above key support levels, but that monthly chart needs so much work. So yes, I'm impressed. I like what I'm seeing, but I'm still saying individual stocks are the way that we want to go, and we're looking at sectors, and we're being very careful about that. Now, within the context, I had a bunch of questions. Let me see if I can go to the questions from the first question. Let me see. Was that the first one? Basil, come to look at. Yes. All right, so let me do this. Here we go. I want to get a lot done today because I'll be away Thursday, Friday, and Monday. I'll be back here on Tuesday. I will be doing my newsletter. I will be not doing my hour-long video overview for the sectors and the week for looking at the week ahead, what we've seen in the next week or two, and where we are in the market. But that's okay. We're just slowly trying to get our positions in order. What we're looking at here is that the Qs have done well. The IWM, the Russell 2000, is really showing that there is a transition going, and we're starting to now include the small caps. That's really important, and we can see how that's going to unfold in the coming weeks. And if you look at gold, gold now is down at just 10 cents, big deal. But look at the chart pattern. It is not in the three candles of the last 3 days. It's not even been able to hold the high of the day, and that just says the 200-period moving average of 1933. Not a big deal, 50 points from here, but that will be a big deal if you're looking at this chart formation and treat this as the Grand Canyon slope on the downside, because it's going to take a time to get back again. I need to show you silver as well. Silver is sitting on that 200-period moving average. It is hugging it, as if to say, hugging it while it's on the cliff. You've seen those people who sleep in a hammock on the Yellowstone. on the face. That's unbelievable. I mean, if you've ever been to Yellowstone, this is something when you watch these little ants walking up the mountain. It's just, I admire their courage. All right, so the weekly chart is in a sell signal. I believe that on Friday at 4 o'clock, we'll call it a sell mode in silver. Let's just do high-grade copper. High-grade copper is pulling back, just digesting really good gains, but it did fail at a peak underneath the major high of somewhere around about June in the 450s. It plummeted down to the under 320. Now it's at 4.05. It's doing very nicely, but it's digesting these gains. Now I need to do this. I don't know if it's going to work. It hasn't worked for a few days. I don't know why. But here's the dollar. Why are the bars so spread out like this? But the dollar is up 0.05 at 103.41. It hasn't taken out the high that was made yesterday. It needs to do that. Let me just have a look at NG to see if it's the same sort of thing. This is natural gas. Natural gas is down at 2.52. It's down 0.06. I'll be right back. Basil Chapman, Dow's down 76. Be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So I just need to check this out. Tony always sends me questions on stocks that either I've never seen before or I just haven't looked at for absolutely ages. PCT, I do believe. Yeah, Pure Cycle Tech recycles contaminants into pure polypropylene. We're looking at trading at 8.23 down 1. So this is one that I'd mentioned was on my list of screamers. Haven't done anything with it. It's digesting these gains. I would just say it needs to digest. I look at the rhythm of those number of bars. It either has one bar rest and then it makes a new high or a new leg up, or it takes its time. I think it's in the take time effort right now. So Pure Cycle, I'm going to make a note here. PCT, look at when I'm back on Tuesday. So all I can say is it's stuck in a range. I wouldn't do anything right now, but I tell you what I would do. I know that you follow these very closely. If at any point intraday it's starting to move to 8.58, in other words, it's maybe starting another one of those big spikes to the upside. If you want, I know you prefer longer term moves, but if you want as a trade, you can grab it, but I would have a 30-cent stop. That's a big percentage, but a 30-cent stop, and I'd have it as a trading stop. I'd tighten it up. If it starts to rally, I'd tighten it up to a 20-cent and then let it go. But at this point, just let it be pure cycle, Tech Inc., recycles, contaminants, etc. It's in the right area, but it hasn't done anything lately other than have a big spike. But it had a beautiful move from the 5s to the 10. It doubled. To this point, I'm going to say have a little bit of patience. So the QURE, Uncure. I don't know if this is biotech or anything like this, and it's just a nice notational aspect that it's got for the title that sums it up. But all I can say is that this is a little tougher. It's got a sideways movement, but at 22, QURE, trading down 60 cents today or 50 cents at 22.42. I'd say let's see how it holds the 2220 to 21.90 level. If it takes out 21.90, I don't want anything with it. If in fact it makes a higher high and it goes to leg B in the 23.05, in other words, it can't just go there, it's going to have a little bit of momentum, then that's different. Then I'm going to say, okay, I think it's starting to make higher highs and higher lows. But right here, I just leave it. Next question I had, if you don't mind, I'm going back here because backwards just because I've got it. Basil high, PLTR, so that's Palantir PLTR. Have I updated? Oh, I used to have this thing notated backwards and forwards. Of course, I've lost the notation, but it had a spike from the 9s up to the 45 area, and then it had a little bit of a pullback down to the 5s. In fact, I'll tell you right now, the last low was 5.92 on the 27th of December. So is this Palantir? Yeah, Palantir Tech Inc. This I believe is the I believe this is the one that has the equipment and the exercise routines, etc. So this is peak A, peak B, peak C, D. That's an E, F/B, and a G/C. So many of these have made G/Cs. They don't have to complete going to the D, but I'm just saying be careful because the MACD and stochastic are all very good. So I'm looking at this at 832. Now, I'm not sure if you just want me to do it. I'll do an analysis regardless of whether you're long, you're short, or whatever you are. What I am going to say, see how it failed, just barely, but it did fail to hit the 927 200-period exponential moving average. And it's pulled back, it's holding the 9. So my suspicion right now is that a chunk of this move has been done, and therefore you've got to be a little careful in the sense that rallies, it's going to take at least 2 weeks to decisively break into the 930 or higher area, and then treat the 200-period moving average as not just a magnet, but a propellant. At this point, it's just going to be a magnet. So I'm going to say to you, time permitting. Yes. So this is what I would do. If you've been long, and you've been long from the 6s or the very low 7s, I'd say that's okay. Be prepared that it's going to digest these gains. A lot of these stocks that have made the lows from December to January and had a big spiral to the upside, a lot of them, I would just put it this way, a lot of them have rebounded strong enough in their dailies to be very impressive, have just begun a nice move in their weeklies to say, hey, this could be impressive, because for a lot of them, the 9-period moving average is just either last week or this week gone L, meaning crossed positive, but those monthly charts are still terrible. So all I can say is this, I would treat this as speculation, number one, and I would definitely say to you, Palantir it's a story stock. It had its moment. Now it's trying to become a more mature company. I suspect there's a lot of competition. What was that one? PLNT. Is that PLNT? Gosh, I haven't looked at this for age. Oops, a plant. It's PLN. Is that plant? I mean, plant, something or other. They have $10 entry and then $1 a month. Yeah, this is a Planet Fitness. There it is. Peak E in the weekly chart, helping to move the monthly chart to an L for the first time. So the 9-period moving average for the first time in a couple of months has turned positive. It has, I'm going to call that was a peak D and a pullback. At this point, just for now, I'm calling this, I can change this a little later on, but I'm calling this an E/B. And my inclination at this particular point is to think of it more as a B. Yeah, they're both digesting gains. Actually, Planet Fitness has a nicer chart pattern than Palantir. You didn't ask me that. I'm just volunteering that. And both of them are, I have to think of this now as, I'm looking at this rectangle formation right here. It's in a consolidation phase. If it dips a little bit too much, it can't make that move back to the high. It did break the high by a fraction. Couldn't close above it. This is more in a trading range between 85, on a very short-term basis, I'll say 84.50 to 79.70. That's kind of your parameters. A break on the upside says, hey, that's very good. A break on the downside says, whoa, you're going to retest the low. So this is the one that I think is a little bit better. You asked about Palantir. And I'm just going to say to you, if I can ever find there it is, PLTR. Yeah, I could put a rectangle in this as well, and I'm going to say, just for now, stuck in a range. I don't see a catalyst on the technical side because the stochastics already pulled back to 68%. I don't see a catalyst to take it to 950, but I do see a catalyst to maybe push to the 875, just under 9, and then maybe stall again. So I hope that helps you. Next question. I went out of order, so I'm going to go back again to where I had the questions. I did that. Palantir check. ABC at 8.4, up volume and down. Yeah, so with Palantir, I've got it still up here. See, the on-balance volume did great. It coincided with that gap. Look how it filled the gap. Oh, the gap. Right. So we've got that. I have it as a 3-day rule only on some part of it. Basically, I have it as a whole formulation of what to look for in gaps. And if it says it closes below the gap low for one day, be careful, because if it does it the second day, there's a chance it's going to fill the gap. Well, it's filled the gap. Now it's done that obligation. So I'm just thinking it confirms my rectangle formation, and the on-balance volume has gone overbought, and now it's kind of okay. So the technicals are not too bad. All right, I want to just do another one or two, and then I have to look at my overview going into early next week, because that's really my PLO. I showed that a little earlier on. Take a 3P for the sell mode, the daily leg, thing in the weekly, digesting its gains. Valero Energy.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just show you something, just on a purely technical level. You see this blue line here? Yes, I know it's a 1 minute chart. It's not the point. I'm showing you patterns. You see the way you had almost a 1-to-1. Look at this. If you take from that level down, this is like what I call the propeller shaft technique, where you can use, if I can get it to work, you can use this particular pattern to say, if it breaks the key support level yet again, and I'm talking about the midpoint of the narrow rectangle formation, you can have a 1-to-1 to the downside. Let's just make it, just to show it green for the moment. Yeah, look at this, 1-to-1 to the downside. Actually, that should have been this. There it is, almost exact. I guess it's a contradiction of terms to say almost exact is exact is exact, but it's really close. And now what's happened is this is going to be the rally that is absolutely key all day today. The Dow's not bad, 85 points down after over 200-point rally yesterday. The S&P down 25, but that's not the point. The point is this, for me, is a key moment. It's using up time. I'm using the 1 minute to show you something that it could turn into another H pattern like this, or it suddenly turns to the upside. Not good enough if it turns to the upside. What it has to do is it has to make to that left side and this low right here, it has to make a cup formation that takes the H pattern successfully back over 41.58. Up over 41.58. It's at 41.50 right now. We'll say nice on a very short-term basis. That's going to help the morning to try to rally further. That's just the way I'm looking. Not only that, this is a Chapman wave Roman candle, a red Roman candle to the downside. And it says if you go into this candle for more than 2 minutes and go below 41, whoa, this is going to be tough. Below 40, whoa. It's a 10-minute chart, 41.49, and hold there for about another 2 minutes. Under 41.49, that's going to be a big problem because it says you could revisit the low that was made and in the 41.43-ish area. So these are patterns that we look at. I look at all the time. I use them in everything that we're doing. So let me go back in. Now, a couple of questions that came in was VLO, Valero, that's a peak E, sell signal upgraded to a sell mode. That should be downgraded if you're going from downgraded to a sell mode at now. And that just says 142 is going to be resistance. It's a 132. And if it closes under 124, the 200-period moving average of 118 is going to be the target. It is a peak D in the weekly. I have no signal other than to say close to a sell signal, but nothing yet. And the monthly chart is still very positive. Next question was, could I look at EQT? This is the natural gas. Remember, we spoke about it yesterday. I said, wow, ugly candle, but if it does work, it has to work right away. It has to work right away, and it needs absolute speed to the upside. We were actually looking at, there was a poll that had UNG, and I said it was at 850 859. I said, well, it actually went quite a bit higher. It went to 890 yesterday. Now it's trading at 846. This is not what you want to see. You want to see an absolute throwing in of the towel. Preferably, in fact, you want to see the biggest volume. You want a volume price climax, Chapman wave volume climax reversal. We haven't got that yet. That usually works with earnings. But in this particular case, if we just throw in the towel where it suddenly slides to 722 and everyone says, that's it, we're done. And within hours, it just turns around. You got this whopping volume candle and it closes up. And then for 28 days, it should not go back to that low. We haven't got anything like that. I'm just saying, be really careful. Remember, I said a tight stop. You would still be within that stop from yesterday if I had said to you at that 859 area of 856, I think it was. Yeah, that's okay. I don't know if I would even give it the 20 cents right now. I'd be real careful. I mean, this is a catching a falling knife. Next question was, so mRNA, Myrna, that's Moderna. Remember we did this the other day. I said, I like it longer term, shorter term. I said it's making this inverted like a V-shaped pattern, like a pyramid up and down, or the arch formation. 200-period moving average is a magnet. If it goes below that by quite a bit, be careful, because the key support is the low that was made back in, was that December? Yeah, December, the week of the 16th, at 162.78. Longer term, there is a story always with Moderna, biotech. They have so many products on the line. But on a very short-term basis, I was concerned that weekly peak C, it's turned down too much. And I don't know how it's going to go to D without a restart completely of the daily chart. So yes, I like it longer term. Shorter term, I'd be worried about it. And the question is, would you buy it right now? And the answer is no. At 160.35, I'd much rather buy higher highs and higher lows than lower highs and lower lows, just at this moment. Okay, next question came in. Crowd, FTNT. No, so FTNT, I think it's the financial security area. Fortinet Inc. had a big spike, must have had great earnings today, up 6.86 at 60.64. That makes a leg A, B, leg C in the weekly chart. I've got an arch formation, a cup formation that says at some point in the next 3 to 4 weeks, it should try for actually maybe even sooner than that. It should try, I'll do this real quickly here. For the left side, right side, there's your midpoint. Let's do the right side, price time. So this is price symmetry. Looking at the right side, make it green. You don't have to have all these colors. I do this so that I can show you the stuff, but you just need to have some way of identifying. You can even put an X in here like I try to do in the futures when I'm working on these things to say, that's my target. So what's my target? My target is uppercase X right there. All right? And that says that Fortinet by the week of the 24th of Feb should attempt to get to 63.56. It's a 60.66. My suspicion is it's actually going to take a little longer, and I would have to do my Chapman wave inside wedge target resistance line a little bit more, less dynamic. And it says, there it is, that's where it goes to. In fact, it moved even a little bit more, another week. It takes another week to get there. So, yeah, that's what I'd be looking at. They're doing very nicely. Here we are. This is the gap. How does it treat the gap? Let's just say that today is Wednesday. If Thursday, it doesn't pierce the low of today, which is 58.72, but instead holds nicely and actually makes a higher high either tomorrow or the next day, that's a really good sign that says that the midpoint of this candle, which is at 60.14, let's just call it 60, that 60 level should hold. If it's taken out, then you got to be careful about the low. But if by Friday it is taken out and closed below this low, it says it could fill some of this gap. Be careful. But so far, it's really good. It had good news, good action to the upside. Next question is, yeah, okay, I did that. Jump the creek. Oh, live cattle. So let's just do this. CC. That's cocoa. Oh, live cattle, LC. LC. There it is. Peak A, peak B, peak C. Yep, it should go to a D. Live cattle's walking the 14 and 9 period moving averages in the weekly chart. This is fantastic. I'll do a little work during the break, and then I'm going to talk about what I'm anticipating over the next few sessions.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so let me just do this. I need to check here with my engineer. So far nothing. So we're just waiting to see if Steve is around. I've just sent out a little word that I might have to, because I'm not here for the next 3 sessions, I might be able to do the next hour. We'll see. But yes, you're here. Oh, fabulous. Steve is here. Thank you, Steve. Good. That's always great to see you. So Steve is here, and there's no problem. Good. Just wasn't sure. So let me just do this. So what I'm looking at here, so live cattle, look at this beautiful up channel. I haven't had a chance to change all the colors. It says that if live cattle in the next 2 weeks spirals above 166, this is a continuous contract, this is 164, it's out of this fantastic resistance repellent zone, Chapman Wave inside track repellent zone that it's been in. Look at that beautiful up channel. Then it's starting to really make higher highs and higher lows. And then the target would be that high that was made in the continuous contract of December of 2019 in the 166.70 area. So it's very close. It's in leg D in the monthly chart. It made a peak C1, C2, but then continued higher. Beautiful. You can see a nice cup formation. Okay, this is what I'm looking at. Volatility index. the VIX index over the next few days, if the VIX index, the volatility index, which is trading at 18.94, up 28 cents, at any point has a spike into the 20.20s for whatever reason, doesn't matter what the reason is, and it holds there. It can't just pop there and then fail. If it holds there, and the very next session, even if there's a bit of a pullback, the very next session makes a higher high into the mid-20, say 20.40 to 2050 or higher area, this market is going to take a beating. But right now, I still see enough buying coming in to just very modestly keep pushing the Dow, pushing the market a little bit higher. But I think we're in a trading range for now. I wouldn't be surprised if by Tuesday, when I'm back, the Dow is within 150 or 200 points of where we are right now, 34,088, even if it makes a new recovery high. So with that said,